I fully support efforts to reduce improper payments government-wide, and believe we need to focus our limited resources on areas that give us the biggest bang for the buck. Now, I've heard a lot of my colleagues focus on improper payments in the EITC, and while there's no doubt that improvements can be made there, I think we need to get some of the facts straight. First, the EITC was signed into law by President Ford in 1975, expanded by President Reagan as part of the 1986 tax reform package. It's been recognized then and now by Republicans and Democrats, liberal and conservative economists, as one of the most effective public policy tools against poverty, particularly childhood poverty. It mitigates the regressive effect of payroll taxes and gives low-income workers a strong incentive to get off the sidelines and enter the workforce. So first and foremost, we need to recognize just how important the EITC is to those struggling to get a piece of the American dream, and ensure that efforts made to improve the integrity of the program don't burden deserving families and make it more difficult for them to claim the credit. So I think you need to fully understand the true extent and causes of high error rates. To echo some of my colleagues, the improper payment rate does not mean the federal government overpaid claims by this amount solely. Indeed, this figure also includes underpayments and payments made without full documentation, which may very well be legitimate. In fact, Nina Olson, the National Taxpayer Advocate, testified last year that more than 40% of EITC claims that initially lacked proper documentation and subsequently received assistance from the Taxpayer Advocate Service were later found to be valid. Now, I'm in no way trying to disregard the issue of improper payments, but it's important to understand the true scale of the problem and not some inflated exaggeration. We also need to understand what factors drive the prevalence of improper payments in order to craft effective countermeasures. While outright fraud certainly exists, the fact of the matter is a larger portion of improper payments are the result of an extremely complex and confusing set of guidelines that are very difficult for low-income, often unsophisticated taxpayers to comply with. As it stands, the IRS rules for the EITC are nearly twice as long as the 13-page instructions to comply with the AMT, or Alternative Minimum Tax, which has been consistently derided by both parties as overly burdensome and needlessly complicated. There are some who propose making these requirements even more onerous. Let's add to the 13 pages, let's add another 4 to 5 pages of documents full of dense, difficult to understand instructions. Now, such a requirement, in my mind, would be counterproductive, causing more errors to occur, forcing more low-income taxpayers to use high-cost tax preparers, including non-regulated ones, which are responsible for the highest EITC error rates. Now, this may help buttress the bottom line of paid tax preparers, but it will only exacerbate the improper payment rate and leave vulnerable families worse off than they are today. So if we're serious about addressing this issue, there are several concrete steps that we could take today that would significantly reduce the error rate while not increasing burdens and costs on taxpayers. The committee had a perfect opportunity just last week when it was scheduled to mark a bipartisan, common-sense bill to combat identity theft and tax return fraud. Amongst other provisions, the bills would require paid tax preparers to register with the IRS and receive education and training. With 68% of EITC claimants using paid preparers, the majority of which are unregulated, we're leaving families vulnerable to unscrupulous actors, some who are just trying to make a quick buck. Nina Olson so much said that. She said, simply stated, unenrolled preparers are the make and break point for the EITC compliance strategies. Now, I'll point out that as proof of that, Mr. Dodaro spoke, and I appreciate your service, about the ranking member's home state of Oregon, and how they achieved a 72% higher accuracy rate than comparable paid preparers in other states. How did they accomplish this? They've been regulating paid preparers since the 1970s. So if we're serious about reducing improper payments, while not burdening low-income families, it seems to me we need to regulate paid preparers. So, Mr. Chairman, I hope we look at this issue not as a way to slay it, which would ultimately undermine the whole purpose of rewarding work and helping families get into self-sufficiency, but to correct it. And I appreciate the Chairman's time.